Heute Nachmittag wird Herr Lemaire gemeinsam mit Christian Lindner ein milliardenschweres Start-up-Förderprogramm ankündigen. Nicht, weil die Start-ups zu wenig Geld haben, sondern weil das Geld auch sehr viel von außen kommt, also sprich aus den USA, aber auch aus China. Und da soll gegengesteuert werden, damit mehr Geld auch aus Europa in die Start-ups, in die europäischen Start-ups fließt. Und genau dieses Thema schauen wir uns jetzt noch mal genauer an. Denn meine Kollegin Theresa Stiens vom Handelsblatt spricht jetzt mit europäischen Einhörnern, also Gründern von Start-ups, deren Start-up mit mehr als $1 Milliarde bewertet ist. Theresa, bitte sehr.
Yes, hello and welcome also from my side. My name is Theresa Stiens. I'm a reporter with the Handelsblatt in Berlin, and my special focus is on the digital economy and on startups, and that's why I'm very pleased to be hosting the next 45 minutes today. We will take a very close look at the European startup scene and assess its strengths, weaknesses and opportunities, and ask ourselves the question, has Europe already fallen behind in the unicorn world? Now, I'm not going to be the one discussing these questions alone. I have 4 esteemed guests, and that I would like to introduce to you now. We have 3 founders of unicorns and 1 investor who is very found in the investment world of startups as well. But first of all, we have Tarek Müller. Tarek is founder and CEO of About You, which is a fashion online shop. And I dare to say he's quite a trendsetter of e-commerce in Germany. He's received several recognitions and marketing prizes, so I'm very interested in his opinion today. Welcome, Tarek.
Many thanks for having me. Hello, happy to be here.
Now, we are not going to only talk about the German perspective, we're going to have an international one today. And so I'm very pleased to have an international guest with us as well, which is Oskar Höglund. He is from Sweden, and he's a founder and CEO of Epidemic Sound, which is a music platform, but he has also founded other startups in the past. So he's going to offer us very great insights, I think, into the startup world, also from a Nordic perspective. So welcome, Oskar.
Hey, thank you for having me.
Then we have, as I mentioned, the investment perspective. We have Tanja Emmerling with us today, who is a partner of the High-Tech Gründerfonds, a venture capital fund focusing mainly on technologies, digital technologies. And she has been very active also in the investment domain for a very long time. So I'm very happy to have the investment perspective with us today as well. Welcome, Tanja.
Very happy to join. Thank you.
And then last, but definitely not least, we have Philippe de Chanville, who is CEO and founder of the French startup Mano Mano, which is an online shop for do-it-yourself and gardening tools. And but he's also previously been active in the investment domain, so he has both perspectives with us today, as well as the French one. We just saw you Minister of Finance, so I think we have quite a lot to discuss there today. Welcome.
Thanks for having me.
Now, before I get started, before we all get started, I would like to take you all on board because you are able to participate in this discussion as well. You can ask questions via our tool Slido, which I will present to you, to our guests at the end of the session. So please feel free to ask questions whenever you like. And then second of all, just to have a small basis, I don't want to bore you with facts, but I think so that we're all on the same page. I have 2 little slides prepared for you, because some of you might wonder, why are they talking about unicorns? What is a unicorn? And so I would like to, well, present to you the definition, which is a startup valued at over $1 billion US. So in the startup world, if we talk about unicorn, that's what we're talking about. And now, how many of those do we have in Europe and compared to the US, for example? And now we can see that the US is far ahead with 511 so far and 321 in Europe. Well, the definition is sometimes a bit hard, but I think we can see a tendency here. So, well, when we look at those numbers, the easy answer to the question today would be yes, Europe has fallen behind in the unicorn world, but I think it's not that easy So I'm very happy to look at the background and, well, at the insights of these numbers, what's behind them. So I think, Philippe, I would like to start by asking you, the numbers that we just saw, do they, in your opinion, do they match your impression of the European startup world? Do you feel as a founder, like in Europe, you have fallen behind compared to other continents?
Thanks, Teresa. No, not at all. Actually, I don't think I would subscribe to that view that Europe is falling behind. From where I stand, and having been very active in the European tech industry for the last 10 years, I really feel that Europe is actually catching up. I believe that this time, in 2021, this year, for the first year, there's been more unicorns created in Europe than there has been in China, around almost 3 times more. And that's an amazing number. And it was never the case in the past. We couldn't dream of that 3 or 4 years ago. And in the same way, VC investments in Europe, I think, are the fastest growing investments of all the regions throughout the world in 2021. And if I was going to see it from a more personal perspective, back in 2018, when General Atlantic, a big American fund, invested in Mano Mano, they were among a handful of big international funds investing in Europe. Now, 3-4 years onwards, you've had over 20 investments in the last 8 months done in the European tech by massive international funds such as SoftBank, Temasek, Dragoneer, Tiger, and so on. I've seen a real change over the past year of the dynamic from those massive worldwide funds who in the past didn't used to invest that much in Europe and are now shifting to Europe big time.
Well, that's quite interesting, and I would like to ask Tanya, as you're an investor. So, would you agree with Philippe on his views? And if yes, where is that change coming from at the moment?
Yes, I definitely would agree with Philippe. And I looked at the same numbers. I think there are 72 unicorns only in 2021 in Europe, and they are spread over 60 cities. So it's not only concentrated in one place, but spread all over Europe. And China had 20, that's exactly. So you could look at the absolute numbers, but also in the growth that Europe shows and the potential that it has. And it shows also that how international investors are attracted to that that capability that we see in the market. So I think this offers a very good opportunity to make more out of it. So it shows the potential that startups have here.
So you would say that European startups also for international investors are interesting, or do they look more at, well, the United States, Silicon Valley, Asian tech maybe? How are European startups perceived?
We see more and more international investors coming to Europe and looking into European companies. So we see there is a big pickup in investments that are going into European companies. So the capital that's flowing into this company shows that they have attraction. We have interesting companies, very good entrepreneurs, good education backgrounds. So there's the potential there. And I think what's now important is to give them the ground really to grow. So what would you need is the later stage capital. Do we have the buyer side? Do we have the public market side to really make them large companies and also make them stay here? Or do we have the ground that they need to develop somewhere else? So I think this is a bit the focus that we have to bring along, that we really keep big companies and build the companies that will make our markets tomorrow.
And why do you think that, especially in this later phase, in the scale-up phase, we are lacking investment right now? I mean, this can go out to anyone, this question, because I was wondering, we've talked about this before as well, and Bruno Le Maire mentioned it as well, but why do we lack the financing in this important stage of growth?
I think you're still missing the buyers. If you have the building companies, how many buyers do we really have from our old economy who are really willing to buy a 1 billion or even bigger company? If you see our exit market, then very often companies that go beyond the 100 million, they find buyers in the US or somewhere else. So still there is not enough potential there. And also if you look at the stock market, so for companies that going public, very often they select a listing in the US, because still like the public markets is still not working to that extent to make them give them enough support to grow really strong here. So I think there's still a lot to do on this side to activate these markets.
Oscar, I don't know if you could elaborate on your experience with financing of your startup. You have found a unicorn, and I would like to ask you: did you have difficulties with access to capital? At what stage, maybe, or did you have to turn to international investors because there was not enough money in Europe?
So I think that from where I stand, the capital question is. It's an interesting one, but maybe it starts earlier than that. But just because if I get to reflect on some of the things you spoke about, I think that the origin is potentially less interesting in the long run. And I think what investors are less looking to is the origin of a company, but more about maybe the destination. And I think that sort of historically, potentially European companies have been less good at explaining their grander vision and looking at the total TAM, the addressable market, and where you want to end. And so I think it's less about origin and more about sort of destination in general. But going back to capitalizing, I'd happily take a Nordic example, because I think that one of the things which we've structurally got right here in the northern parts of Europe is that we have this concept of collectivizing risk, in the sense that if I compare to especially my American colleagues and entrepreneurs, we find ourselves in a situation where society has come together and sort of collectivized risk. So in terms of education, in terms of healthcare, in terms of housing, we're allowed to take risks. We're allowed to launch companies, and sort of there's a network of sort of aid designed to help us, not if we fall, but when we fall. And so there's like level one of financing is sort of taken care of from a society perspective. So that, at least from my perspective, allowed us to launch like a number of different ventures and learn and understand. And then to like previous speakers, sort of as you accelerate and you want to find more capital, so I think that's a second part that maybe Tarek and others can speak to. But sort of for me, like getting off the ground is like a very important part. And I think the concept of collectivizing risk and making sure that there's a social net that captures you. So it speaks intuitively again. So people think that entrepreneurs are sort of just driven about sort of the upside and how big it can be, but it's totally dependent on the size of the net. And so how can you carry risk as a society and allow individual entrepreneurs to take more risk than most people are comfortable with?
I think it's a quite interesting point you're making, because if I understand you correctly, you're saying that because you have a strong also social network in the northern countries, in Sweden, for example, people are willing to take more risks. Founders are willing to take more risks because they don't fall as low, if I understand you correctly. But if we take that as an assumption, I mean, in the USA, we do not have this kind of network as the social network as we have in Sweden. So how do you explain that? Nevertheless, over there, we do see more for the last couple of years. We have seen more activeness in the startup world.
I'd gladly let sort of others respond to that if somebody feels strongly in the question, because I can't really speak to sort of how they think and how they work. I just reflect on the fact that I think that I have this great example of mine is that there's a conference in the north of in Europe in Finland called Slush, which is a startup conference. And the founding story, I think, sort of speaks to a point that I'd like to make, which is that when they founded the conference, they said that sort of, we're so fed up. Every single conference always benchmarks with the US, and everyone always says that we apologize, we don't have palms, we don't have sunshine, but sort of please come to our conference anyway. And so the founders over at Slush said that sort of, when's the worst time to come to Finland? And they said November. And okay, that's when we're doing our conference. What's the worst possible weather? And someone says snow, and then someone says, no, snow melting is worse. And so it's slush. And so in the inaugural event, they said that, so let's be proud of our difference. Let's be proud of what makes us unique. So the conference is in November. It's called Slush. And the first year they had snow machines that produced slush. And I think that sort of speaking and being proud about our differences is what we should be focused on. So the fact that we have this social net that allows us to carry risk as a society, and we get not just one, but two and maybe three runs at giving something a go, and then we succeed. That's the formula that's worked very well for us. And I can speak less to like the American version, what works there, but I just know that I think a big point here is sort of lean into our differences and use them to our advantage and sort of scale them.
Tarek, I don't know, would you agree with Oscar that you're fed up with being compared to the US? That at conferences like this one as well, you're always referring to the US, and at the same time, what would you say? You're from Germany. We have slash. I don't know if we have slash outside right now, but what would you say could be the unique selling points for Germany and for Berlin as a startup hub?
I mean, I agree with obviously countries or continents being compared. I think that's normal. It's also companies are comparing themselves with their competition, and we are in competition with other economies. I think I would agree with Philippe's and Tanya's view with on Europe catching up. Nevertheless, I also believe we need to conclude that yes, we have more and more unicorns, but the sheer size of the companies that we have created in tech is really far behind what the US have created. I mean, all the big tech companies everyone is speaking about, like Apple, Facebook, Google, and so on, are not from Europe. And I believe Tanya was also speaking about a not existing exit market for companies of size. And I think that's also the reason for this is also that we don't have any of those like big tech companies. So I believe it's not just a question on how many unicorns we have. I think it's also the question on how large are these unicorns and on how large they can become. And here I believe, especially companies from the larger economies in Europe, like France and Germany, have a kind of a disadvantage that in the first place seems to be like an advantage, and that's the local market. Germany and France are large enough to build a decent company, also a unicorn, but they are by far not large enough to build, you know, kind of a big tech company. And I think this is one of the advantages of the Nordics. A lot of Nordics companies are launching kind of international because the local market is just too small to get relevance. So they are forced to go international and by this become larger faster. And I believe Germany and France companies need to think more international and need to think bigger. And we are also speaking about the kind of late stage lack of capital. I think that also is also connected. I mean, on the one hand, connected to a non-existing exit market, but on the other hand, also connected to too little ambition. Yeah, I mean, if we look on the largest tech companies we have in Europe, they are still, I would say, rather unambitious compared to the ambitions and visions that US and Asian companies often have. And I believe if we can fix that to think bigger, then we also attract more capital. Nevertheless, I believe it's also a question of maturity of an ecosystem. I mean, the European ecosystem is 1 or 2 steps behind. I believe it will come and we will see kind of bigger tech companies also coming from Europe. But we're just lacking, I don't know, 5 to 10 years behind the US, not just in terms of capital, but also in terms of ambition and the ability to internationalize. And here I believe the pandemic has helped because it has kind of, it has eliminated borders to a certain extent. It's also one reason why there's so much capital coming to Europe is actually because now fundraising works via Zoom. So actually where you're located is not so relevant anymore. And Europe is very distributed. We don't have these strong hubs like the Silicon Valley. Obviously, we have Berlin, we have Stockholm, etc. But there are less developed hubs on a local level than the hubs we had in the United States, and network there was very important. Now that fundraising works over Zoom, actually, this is not that relevant anymore. And speaking of this, we have IPO'd our company in June 2021, and we did our whole roadshow via Zoom. So I was literally flying around the world via Zoom from my little home office here. And this obviously has helped a lot because we were able to meet so much more investors than we would have if we would have needed to, you know, fly around the world. And I think that also helps to accelerate this maturity of the ecosystem, and hopefully we'll see more unicorns, but also especially larger unicorns, and then also unicorns that turn into big tech companies that also might acquire companies, because that ultimately also fuels the ecosystem a lot.
I think it's interesting that you're talking about, you know, becoming bigger. I think this is a big theme at the moment in the startup world. If we listen to Bruno Le Maire before, he's talked about giant companies, not only big ones, but giant ones. So Philippe, I think France is focusing very much on funding the startup world at the moment. A lot of support is coming from there. Do you feel like your government is going in the right direction with this strategy?
well, they're definitely helping with creating a lot of startups. And so, I mean, this point has been raised a number of years ago. And now I think throughout Europe, all the government, and definitely the French one, is very much helping creating the right ecosystem for people to launch their company. But where I totally agree with what Tanya said, and then Tarek, is about the exits and what drives a company further. Creating a 1 billion euro worth company is great. But what you want to build is actually a 10, 15, 20, 30 billion euro worth company. And to do that, you need a number of things, including the right kind of funding. And, you know, I mentioned earlier big international crossover funds, but they're not European, these funds. They're mostly American or Asian, not European. So you've got a lot of VC funds in Europe. You've got a lot of growth fund in Europe. So you've got a few, not a lot, but a few. You still don't have those crossover funds or those mega funds, which will help you grow even further. That's the first thing. And second thing is you've got a very difficult access to the public markets through IPOs, because in Europe, my feeling is that there's a lack of analysts, tech analysts in Europe on the tech markets. There's lack of appetite from the European institutional investors in investing in tech. They'd rather invest in, I'm sorry to say it that way, but in the old economy. And as a result, when you're a tech company with an American-like profile, i.e. either loss-making or scaling fast and going for the whole of Europe or outside of Europe, but not in a traditional way, then you find it hard to find the right analysts in Europe. And you're looking at American analysts who are used to these kind of models. And so could the French or the European governments do something about it? Yes, probably. They could help or foster institutionals create such funds and therefore create exits for the future.
We just, Sebastian Mattes and Bruno Le Maire just talked about it. There will be a very big fund setup of over 1 to 2, we're not sure yet, billion US dollars, or euros, I think. But I was wondering, maybe Tanya, you can elaborate. Do you think that public funding is the right way to go, or should private capital, well, play the most important role in the funding process?
I think it all comes together. So if we see our example, we started off in 2005, where there's no one who wanted to invest in venture scene, not let alone deep tech or anything. So, and now we're in phases where we see a lot more early stage investors coming up, and there's a lot more capital in the market. It's not a foreign thing anymore, so it's a lot more established thing. So I think it comes together with one another. I think also public market has to invest in their surrounding that makes a good environment for companies, so that let alone infrastructure to make them the ability to become independent technology-wise. So there's a lot that he can foster, so also that the capital that's invested, that's going into a good place. But I also wanted to pick up one idea that Tarek had, and also Philippe mentioned. So it's important also for our entrepreneurs to think big. So we want to create global players, because we also have to think about the talent that comes along that we attract into Europe. Because someone who is a super good tech expert, he wants to work in a top-notch company. And our biggest players are still not the tech companies. It's the old economy. It's the Nestle's, Roche, Louis Vuittons, but we need companies that also attract the talent, that we build the companies for tomorrow. And so that all comes together. So the public money, building the environment and giving the start to it, and then also the private capital coming into it to really invest that space. We build it all together, I think.
And with this regard, I would like to ask a question just quickly that also came up in the chat. Maybe to Oscar, because we also talked about it beforehand. Do you think that Europe needs to, or European startups, the European startup scene needs to think more as a European startup scene? Are we too much focusing on German, French, Swedish startups? Do you think that's a problem?
I think that perhaps that's the case. And similar to Tarek's point earlier, so I couldn't agree more. Here in Sweden, we speak a weird, insignificant language like 10 million people. And from day one, we're taught that in order to have any chance of surviving, we need to think global and think big immediately. So back to my original point, so it's less about the origin, more about the destination. You have to think big by default. And I can sometimes see that that could be to some European countries' detriments, where their own home markets are large enough to build like the a $1 billion company. But to Philippe's point, if you want to get to a decacorn or like more than that, you need to think bigger. But I think besides that, the role I'd love to take on this panel, seeing as it's quite finance oriented, I'd love just to highlight maybe 2 or 3 things from a softer, more cultural perspective, which I think could be sort of great in general, and especially looking at your backdrop, Therese, with the people who are sort of standing behind this. And I think like culturally, there are a few changes that I think would benefit Europe. The first one is the concept of hungry wolves. And for a long time, my sense has always been that sort of there's been this school of thought where if you're a founder or a founding team, you need to have all your eggs in the same basket, in the sense that you can't de-risk. You have to be like 100% leveraged into your company. And it was frowned upon culturally that you would de-risk, sell part, like materialize some money, and because then you weren't like a real entrepreneur taking real risk. I take huge issue with that. And I think that's a core part of understanding, like if you want to really think big and build long-term, I don't know, my co-founders here on this call, how long they've been running their business, but Epidemic is like a 15-year endeavor. And at some point being allowed to sell a small part to de-risk, to actually take the big bets and go for the huge wins, that can't be demonized as it's been historically, like sort of, you can't sell anything. So like hungry wolves hunt the best. That's not always the case, because hungry wolves sometimes die because they don't get any food, right? The second one is, I think, about the notion of celebrating learnings. So let's go back to your US versus European sort of example. Speaking to Daniel Ek the other night, and I sort of no other comparison, but I know that Daniel has founded multiple companies before sort of Spotify became what it is. And I've been fortunate enough to launch multiple companies before Epidemic became what it is. Yet there's this nuanced difference. When Europeans talk about companies that don't materialize, we talk about failures. Whereas where the Americans talk about companies that didn't materialize, they call it experience. And I think it's so crucial that we don't like stigmatize launching businesses that are not failing and feeling like that person sort of failed, so she or he is not interesting. But celebrating and just sort of acknowledging that the nuances of trying stuff, and there's a reason why there's like risk sort of, there's a risk component, because you take risk and you need to be okay with succeeding, but also failing. So sort of leaning in and calling that experience rather than failure is like another cultural nuance that we've been not super good at. And the third one is like role models. I think sort of Sweden is definitely in a second comings. We had like a period with Ericsson and sort of Volvo and sort of SKF and Atlas Copco and Ericsson, and sort of built huge companies. But then for a very long period of time, being an entrepreneur or being a builder was scrutinized and it wasn't celebrated, and sort of it's probably to avoid tax or something. But now there's been like this second coming, and people now are aspirationally trying to be entrepreneurs. And I think that celebrating entrepreneurship as a craft, I can't emphasize this enough, and the operators around it, because I get way too much credit as an entrepreneur, because like, wow, it's just, I mean, I'd argue even more about the operators, like the C-level, the teams who join these tiny companies, have a big vision and just bring so much knowledge, like making them seen, giving them a voice, giving them a platform. So these are like 3 soft things that just I'll put out there.
I'm actually very grateful that you're taking on your role as a cultural advocate, I think you said, or a soft advocate, because I would like to also move away a bit from the finance aspect and talk about also human capital, or well, people. And people need things where they are. Not only a good company, but also surroundings are very important. And so, Tarek, I looked at your website of About You, and I saw that there you had 95 open positions just in the area of tech and development. Do you feel like you are losing maybe skilled people, especially in the tech sector, to the Silicon Valley, or do you find the right people to work at your startup?
First of all, I appreciate that we move away from financing, because I wanted to add one thought that I believe it's not, we don't have a problem in financing. And Teresa, you were saying that there's a big fund being set up of 1 to 2 billion. And I just want to say that 1 to 2 billion is really not a lot in the today's world. Yeah, Tesla is burning that, or had been burning that in 1 quarter. And we are seeing financing rounds of in private sector of above $1 billion. Yeah. So if we are talking about kind of, okay, now we got to the point where we have unicorns, I believe we don't need to think about how do we get to 10 billion, but we need to rather get to 1 trillion. Yeah, because this is what we see in other continents. Then certainly 1 to 2 billion is not helping. And I also believe that we don't have a lack of financing. I believe the question on do we want to set up funds in Europe is more of a political question. It's not we don't have a lack in capital for the good companies. Actually, good companies get capital everywhere. It's really, I think, a political and societal question whether we want to make sure that the companies are getting money from our basically countries. Yeah. And I believe that's the right thing to do, but it doesn't solve the problem of building larger companies, because there is no lack of capital in the world, especially not at the moment. I believe you're pointing to the right direction. It's rather a cultural thing. It's a thing of technological skills. It's a question of human capital. I couldn't agree more with what Oscar says. I believe these are the things that are much more the reason than a lack of capital, especially now. I mean, 10 years ago, we definitely had a lack of capital, but not anymore. So I believe the reasons for us being or have been fallen behind, especially in value creation, are others. And you're making a good point with human capital. I mean, we are not losing people. Our fluctuation rate is actually quite low compared to others in the digital industry. And I couldn't recall any person that has actually left our company to the Silicon Valley companies. But I would assume that in the future it will be more, because they are starting to switch to remote. And therefore, for them also doesn't play a role where you're sitting. So I would assume that in the future, we will lose people to the big tech companies, but we haven't so far. Nevertheless, it's obviously hard to find talent. Yeah, I mean, we have more than 1,500 employees in our headquarters, so 95 open positions is actually not a lot. We are growing our personnel by 10 to 20% every year. So we're looking for 150 to 300 employees more net. Yeah, so that's a lot to hire, actually, even though our fluctuation rate is low. And here the problem is really, where do we get these people from? And especially, I believe, in the IT segment, we obviously have a lack of talent. And this has also to do, I believe, with how attractive is it for young people to become a developer, for example. Yeah, and how cool is it to be a developer? Yeah, and I would say, in Europe, it's not seen as super cool. Yeah, it's probably seen as cooler to be in communication and marketing and all these things where we have plenty of people actually, and there's absolutely no lack of people actually to hire marketing people. And it's also not made super attractive in schools. I mean, I can speak mostly obviously for Germany. There you're not in school. Nobody tells you, hey, cool, you know, the technology is really cool, development is really cool. Maybe you should consider being a developer. And that is one reason why we have so little developers and IT people in our local markets. And as a result, I mean, we as About You hiring probably more than 80 or more than 90% probably of our IT talents outside of Germany, and often even outside of Europe, which, by the way, works quite well. So if I speak to my American colleagues and entrepreneurs, for them, it's much harder to hire foreign talent and to get them in the country. So I think in terms of bureaucracy, it's quite okay. Could be better, but it's better than in the US, for example. Nevertheless, obviously, it is a challenge to find enough people. And here, I believe, looking to Asia makes sense, because there, as a country, they have decided as a strategy to really invest in IT education, etc. And they are producing so many development talents that unfortunately stay in the country, so we don't have access to them mostly. But it's still, I believe it was a smart and long-term strategy to really realize that the country is depending on IT talents, and then kind of educating them in a very early stage and making sure a lot of people actually want to become developers.
Well, thank you very much. With regards to the time, I think I would like to move on to the Q&A session, because I saw that we have quite a few interesting questions that came in. One that I also wanted to focus on, I'm sorry, we're moving a bit back to the financing topic, but I think it's interesting because we've talked about it before. What is the problem if we have non-European investments in European startups? Mr. Lemaire talked about dependency or independency, but I don't know, Tanja, how would you view this from an investment perspective? What is the problem?
I wouldn't describe it as a problem. But I think we can do much more for our own industry if we have more capital that is invested here, and that we can leverage also the companies with our money, because we build our industry. Of course, it is a good point if we can attract international investors, because they are also pulling companies into international markets. So it has also that advantages there. But we want to create, of course, the industry to make make them the space that companies can grow very well here and not dependent on that. I think that's the problem. So we are dependent capital-wise to make the real large companies. We're dependent infrastructure-wise on other markets. We are depending technology-wise on other markets. And I think to make a strong ecosystem, all points have to go together. So we need to have the capital, we need to have the surroundings to make the big companies.
But I mean, I would actually add that it doesn't matter where the money is coming from for the company, but I believe kind of there are two side effects to that. One is kind of that the investors actually learning how companies are scaling. And here I believe it's more the question on where's the investment manager coming from? Because actually, if you look on US funds, they're getting their money from all over the world, kind of the LPs, the limited partners. These are the investors of the investors. They're coming from all over the world. It doesn't matter. But the funds are located usually in the US. So the investment managers actually, obviously, if you invest in a company, you get great knowledge about the company. So the knowledge is being lost, basically, that is gained through the investment managers. I think that is one point. And the second point is historically, our kind of European money has not participated in the value creation in tech. Yeah, so we have just lost basically an investment opportunity that historically was a very good one. Nobody knows how it will be in the future, but historically we have just lost return basically as a society. But generally, I believe, especially from the US funds that are definitely not politically driven, so they are not from the government, etc. It might be a bit of another case in some of the Chinese funds, yeah, where there's also a political agenda behind it. That might be another problem, but looking on US funds, there is no problem in terms of where the money is coming from. It's a knowledge problem. We are losing knowledge.
I have another question that I just saw popping up, which I thought was interesting, maybe for one of the three founders here. Why is it important to talk about a unicorn? I mean, why do we have this threshold of 1 billion and suddenly it's from a, I don't know what it is before, if it's a horse or a donkey, but suddenly it's a unicorn. So what does this threshold of 1 billion mean? Why is it so important?
If I may start on this one, because I've got a strong view, I don't think it means anything. And I'm saying that. I don't know if we're a unicorn, if we're a goat, if we're a reindeer. I've got no idea. And to be honest, I think we're not interested. I mean, I don't think it means anything to our employees. I don't think it means anything to our clients. It only means something to people who fund the companies. And it's probably a bit has-been, to be honest. The real truth is, are you a long-term company that's going here to create value in your local geography in Europe? Are you going to create jobs in Europe? Are you going to have a tech footprint in Europe? And is what you're building today going to help tomorrow's generation have a competitive advantage over the other regions in the world in the coming 10 years? And that depends on what you're creating. And yes, often, but not always, unicorns are kind of big companies, as a result have many employees, and as a result have a chance of distributing value around them and creating enough tech footprint to be able to foster future cohorts of entrepreneurs. But apart from that, really, it's a long-winded, long-sighted view. I don't think it brings anything to the people who matter to us, our customers and our employees. I don't know what others feel about it.
Oscar, I saw you raise your hand, and you agree with Philippe.
Yes, I agree with Philippe, and I think that the moment, it's almost like a test, right? Because the moment you start thinking about that and you're excited about that, you're basically doomed because you're focusing on the wrong things. If I try to find anything positive, potentially, I think amongst other entrepreneurs, if you reach that status, there's some kind of an understanding, maybe lack of a better word, called it respect, because typically, and I can only speak from my own perspective, but there's often a lot of hard work, many crises, a lot of commitment, a lot of challenges, a lot of ups and downs in order to get to that point. So it's a quick way of showing like, wow, there's been struggle, there's been work, there's been sacrifice. And so but that's basically the only thing I can think of. Other than that, I would argue as well, it's a label that sort of other people find more interesting than I guess we do. Because it's also very fickle, right? Value is in the eye of the beholder. And so if you fall too much in love with that, you're basically in a bad place.
I would add one thing. Mm-hmm. So when we became a unicorn, we took that as a marketing opportunity for hiring people. And just from a data point, we are tracking everything. We're a very data-driven company. So we're also tracking the performance of our job ads, for example, on LinkedIn. And what I can say is claiming that you're a unicorn leads to a higher click rate and to a higher conversion rate in terms of job applications from people outside of the regions that you're active. So people that don't know you as a customer. So About You, for example, is very well known in a lot of countries. But if we try to hire people in countries where we are not very well known, people are hesitant. If you then put the unicorn label on it, it increases the chance of people applying for a job. But that's probably the only advantage I see, but it's not so insignificant.
Tarek, I may add a last one I just thought about. Maybe our voice is better heard when we speak to the European Commission or politicians in Europe and tell them that there's something that needs to be done, for example, to harmonize processes at European level for the administration, collection, consignment, transmission of a lot of data and information which is not harmonized at European level and harms our companies. Maybe being a unicorn helps have a voice that's heard at political level.
I think we have time for one last question. I don't know, I think it's asking a bit for details. I don't know if we have them, but maybe from your impression. Someone asked, are there differences in the rate of survival of startups in the US and the EU? So, I mean, how many of the unicorns, maybe even, or the startups we're talking about survive or for a long term or make a successful exit? I don't know if you have an impression, maybe. I don't think you have numbers there, but.
I mean, I don't have a number, but I just want to add one point to actually what Oscar said, and that is one impression. It's a very unscientific impression that sometimes European founders and German founders are actually hesitant of shutting down their company. So actually, I believe it's not a bad sign if a lot of companies, don't succeed, to not use the word failure here again. But actually, due to our cultural hesitance or due to the cultural stigma of then failure, I think some people actually hold on too long to a company that has no potential to grow big. So I had a lot of conversations also with companies that I've invested in, where I said, guys, shut it down. I mean, I know I lost my money, but don't go after the little chance of getting 10% of the money back, where you could, where probably you are smart people, just open up a new company, give me, I don't know, 0.1% of the share and I'm happy. And you don't even need to give me share because it's a waste of time running around something that is actually dead. Yeah. So I believe it's not a bad sign of companies not succeeding. And I wouldn't see that as a quality stamp, the rate of companies that actually succeed. I think the quality signal is how many companies succeed, but no matter how many have actually not succeeded on that way. And I believe sometimes more companies need to not succeed. And one anecdotically one VC has actually told me that often the most successful VCs have a higher rate of failures within their portfolio, but they also have a higher rate of super successful companies in their portfolio. So here again, another sign of this being kind of an irrelevant metric.
Well, thank you. I think it's a quite nice note to end our discussion on, that, well, failure is experience, I think is what you said, Oscar. Well, thank you very much for being with us, for your insights and perspectives. And thank you to the audience, obviously, for your participation, your questions, and your interest.